Broadcasting from the commodity capital of the world, Zurich, Switzerland, this is Insider's Guide to Energy.
This edition to Insider's Guide to Energy is brought to you by Fidectis. Go to www.fidectis.com for more information.
Welcome to Insider's Guide to Energy. I'm your host, Chris Sass, and today we're going to talk gas and specifically North American gas. With me is Jay Bhatty. Jay, welcome to the program.
Thanks, Chris. Thanks for having me in the program. I recently saw that you guys completed 100 episodes, and just looking at some of the previous guests on your podcast, I was flattered. So thank you for having me here.
Well, we are absolutely happy to have you here. It's been a pleasure. I know I was hanging out with you in Houston just about a week ago and thought it would just be an amazing thing for you to share some of the conversations we've been having with our audience. Before we go there, I know who you are, but I'm going to guess my audience doesn't really know who you are. So let's start by a little bit who you are professionally and what company you're a part of.
Sure. Yeah. I'm the CEO and founder of natgashub.com. We are a software company based right here in Houston. And just from my background, I've been in the energy industry in Houston for a long time. I started my career at Enron, and then moved around a little bit, and pretty much stayed in natural gas. And that's kind of been my passion. And after that, worked at JP Morgan. I was a gas scheduler, and then moved on into gas trading. And then I was also managing a lot of the Gulf Coast assets. So really lived and breathed natural gas, front to back office. And that's been kind of my background. And the company, Nat Gas Hub, was really started by experiencing, some of the pain points firsthand in the natural gas market. And what we built is a multi-pipeline dashboard that connects any gas shipper to over 200 different pipelines in the North American market. And the aha moment really came, my first week on the job at JP Morgan. I was tasked with scheduling, 15, 20 pipes. And I was, it's a highly deadline oriented environment, a lot of high pressure, stress, and you're supposed to get your nominations in. 11:30 a.m. was a nomination deadline at the time. And it kind of dawned upon me, like, this is kind of crazy. Like, you have so many different spreadsheets. And almost the idea that came in my head is, it's got to be an Expedia type software that kind of, when you go shopping for hotels or an airline, you just go to one website instead of 100 different pipeline websites out there. So that's really how the software was born.
So you started a company to basically be the Expedia of gas nomination and scheduling, perhaps, if that's an analogy. So it's a tool that you can use to do this, to make the spreadsheets and things go away. There's been a lot of news about gas recently, right? It makes the newspapers, it makes the evening news. Here in Europe, it's been not such a good year for gas. Everyone's kind of saying, well, because of Germany's dependency on Russia for gas and things like that, the market has changed. What's the U.S. market like for gas, and aren't renewables kind of going to displace it?
Yeah, sure. Up until the end of last year, there was really this idea that there's enough gas out there, shale gas production. Everybody knew about it, and when you're swimming in a commodity, it's kind of hard to see how important it is. But then, as soon as the war started in Ukraine, a lot of things changed, and people started green lighting anything related to natural gas. Prior to that, there was apprehension. Oh, it's a fossil fuel. Do I really want to invest in a fossil fuel going into the future? But if you kind of think of the scalable fossil fuels and the energy fuels out there, there's really coal, gas, nuclear, that are kind of the three primary fuels that can be scaled up to produce electricity. And if the share of coal has to go down, and there's not much appetite for nuclear, the share of natural gas in the short term has to go up to account for it. Yeah, sure, there'll be wind and solar at some point in the future, but natural gas is also a very good complement to those fuels because the intermittency of those fuels. So I strongly believe, and a lot of people in our industry already know this, but even outside the industry, it's starting to dawn upon the people that natural gas, at least in our lifetime, the share of that in the market is actually going to go up before it goes down. And I'm
Now, does
talking the
that go up
next.
with carbon capture? So, do you anticipate that they continue to use natural gas, but put carbon capture on the turbines, or what are you expecting?
Yeah. It's that'll be a big component. Carbon capture, whether it's hydrogen blending of natural gas, renewable natural gas. At the end, it's natural gas molecules, and they're the ones that are going to be sourced from in a variety of ways. How they're produced and how they're sourced will change. And the market will look, a lot different in the near future. But just the share of natural gas, with there being no appetite, not much appetite for nuclear on the political front, and even on the cost, from a cost perspective, nuclear is very expensive. So yeah, from a pure physics perspective, it's almost hard to see how natural gas is not going to be the fuel to help us transition. And we talk about this energy transition, and some people mistake it. It's not a switch. You can't just say it from today to tomorrow. It's really a transition, and it's going to take a few decades to change it on a scale not the size of North America.
But is
So
that not just a North American bias? Because we have about 20 years of natural gas. We have reserves. We're energy independent on natural gas, from what I understand, right? So, is that a North American perspective or a global perspective?
Yeah, and for the longest time, it was just North American perspective because the traders in the natural gas market always assumed until a few years ago that the U.S. natural gas market is kind of like an island, and every molecule can be accounted for. But that changed a lot in the last couple of years. Now the entire world is hungry for U.S. molecules, and there's a couple of reasons for that. If you want the cheapest price for a good, you go to China to manufacture it. But what's happening now with natural gas is the US is a very political stable country. So a lot of the Europeans, they would rather go to a country like the US to source the natural gas that's not a dictatorship. The laws, it's a country of laws, and it's predictable in terms of what the risks are. And then the price of natural gas, the big determinant, the US is the cheapest source of natural gas in the market today. So both those factors are going to make a lot of buyers hungry in the world, hungry for U.S. molecules, and so that really makes the U.S. natural gas market a prime for be able to supply LNG to the global market. So I really feel like the North American natural gas market is sort of on this cusp of the golden age. It's entering the golden age of natural gas, because not only is natural gas fuel for electricity, but it's used in fertilizer for food production. And a commodity as critical as that, and for U.S. to have so much of it, and for the U.S. and the rest of the world to be so short natural gas, it really puts the North American natural gas market in a very good position.
So, the market's good, but we just had the Inflation Reduction Act pass. And really, that was billions of dollars towards renewables. And I don't know if natural gas qualifies as one of those.
Yeah, sure. And just to be clear, I'm obviously biased towards natural gas, but in no means am I, with full credit to the environmentalists. Yeah, we do need to have solar and we do need to have wind, and the Inflation Reduction Act has a lot of investment dollars that are allocated to those commodities. And in the future, yeah, we will need those. But even in the world, let's say that all of nuclear goes down to zero, all of coal goes down to zero, the renewables by themselves are not going to be able to power the grid unless you have massive battery scale storage, and you're able to store all that electricity. The renewables are always going to need something like natural gas that can ramp up and ramp down quickly. So that's just unless somebody creates a magic fuel in the future that can help wind and solar run all the time, every time. I just don't see from a science perspective that there's anything else that could replace natural gas.
And then you mentioned your company, you were helping with nominations. You talked about the different pipes coming around. How is the infrastructure for gas and how is that developing these days? Is there still resource going into it or is all the money going into renewables these days?
Yeah, that is actually a very unfortunate scenario that there's almost no money being spent. There's a lot of cash sitting on the sidelines that want to invest in new pipelines. And that's almost not happening just from a political perspective and from a permitting perspective. Natural gas are actually being canceled and no new projects are taking off. And that kind of leads into the scenario, how is the market going to change in the next few years? What's going to happen? At least I strongly believe that the California or New England, they're going to have a Germany moment in the next few years. And I don't know exactly when that might be. And the reason I say that, obviously I don't want them to go through this scenario where there's a shortage or scarcity of energy in any of those areas. But just from a physics perspective, there's a finite set of wires and pipelines, let's say in New England. And what they're doing is they're replicating the exact playbook that Germany went through. Germany scaled down nuclear. They're scaling back up now. Germany had scaled down coal, and they're back on coal now. And now Germany is wanting the U.S. natural gas from the Gulf Coast. And the New England is doing exactly that. They are getting rid of coal assets. They don't want nuclear. They're not allowing new natural gas pipelines, and they're adding intermittency to their grid at the same time. And so all of these, if you look at from a finite physics perspective, you're taking away something and you're not putting back into the system. At some point, the system is going to break down. And sadly or unfortunately, that might be the point at which people realize that you can't just take energy for granted.
And I mean, I think, but Germany's gas prices. So before the war, frankly, there were already concerns about gas in Europe, right? The gas crisis didn't, I don't believe, start with the Ukraine invasion. I think there was already a problem before that. Um, when you say they're going to have a Germany moment, so what you're saying is they just won't be able to get through the infrastructure. That is not enough capacity to get the power to California or New England, or what do you mean the Germany moment is? Why will it be short?
Yeah, and by that I mean just from a pricing perspective, not a bottleneck perspective. Not being able to get the natural gas to the power plants that produce electricity, or the natural gas straight into the homes that consume or run on natural gas. And the reason for that is, you can see it now. The Waha gas in Texas, in some areas, it trades at 30 cents, whereas in TTF it's trading $30. So there's this big disparity. Europe is sending a very strong price signal to the market, and so all the natural gas is headed there now. And that's eventually what New England or maybe California is going to have to do. Is if they want to attract those molecules, they're going to have to permit new pipelines, or they're going to have to send a very price signal to have the commodity flow through their existing bottlenecks.
So now I think Europe has benefited from a little bit of a slowdown in the economy in other places for competing for gas this winter. Is that the same thing taking place in North America as well? So I think the demand from Asia, kind of gave a respite to Europe to be able to get some of that gas from North America. Is that kind of thing taking place in the U.S. market this winter?
Yeah, so Europe, they've actually benefited so far. People are forecasting a doomsday scenario for Europe by this time. But Europe really bet on the weather for the month of November, and they won. And so far, that's kind of played out in their favor. But the strategy, the long-term strategy, obviously, the European strategy is to pray that we don't have a very severe winter. And in the long run, that's obviously not a sustainable strategy. And so eventually, there's going to be a turning point where there's a bottleneck. All this storage that's floating out in the Mediterranean, waiting to make its way into Europe. The reason that happened and the prices cratered or came off their highs is because, as the saying goes, high prices cure high prices. And so all of Europe sent this really strong high price signal to the rest of the world, and all the ships headed there. But there's a bottleneck. They don't have that much LNG processing capacity, and soon that's going to work its way into the system, and eventually the prices will come down. And so we're seeing a little bit of that play out in the U.S. as well. The weather has been mild here, and so gas has been making its way into storage. And that's kind of relieved some of the pressure on the prices.
But as we say that, I think there's a large storm on the West Coast today in the U.S. and then in Europe is in a cold spell this week. So we'll see how the winter goes from here. It has been unseasonably warm. Like when we were in Texas last week, it was 80 degrees, but I don't think it's still as warm in either continent at the moment. But
Yeah, exactly. And I've seen that from the gas trading days, that first pop in gas prices comes when everybody sees New England is whitewashed, and people kind of panic, and it happens every year. So yeah, once we get into the winter, first second week of Jan, February, that's where we'll really get to see some crystallization in the price.
all right, so we talked a little bit high level, but are there other problems in the North American gas market? Are there leading indicators that there's bumps in the road ahead?
Yeah. So, the biggest problem that at least I see from a technology perspective in the natural gas market, we talked about the pricing, a little bit of the supply and demand, but from a technology perspective, what's going on is a lot of the producers, they have systems and technology to process these transactions. Where you're trading, you're buying and selling, and you're flowing gas, and all those transactions are processing through your ETRM system. And now we have this new source of demand. Earlier for the gas market, the biggest source of demand was power generators, but now it's LNG buyers, and they're global LNG buyers. So all of these companies are just going to have to run more volume, more transactions, more number of trades through their existing systems. And some of their systems are just not scalable enough. The LNG market might become bigger than the US power gen market. It used to be a small sliver, the LNG market of the entire North American gas demand picture. But now, obviously, the U.S. LNG market is feeding the entire world, all of Europe. And so for all of these companies, the BP, Chevron, even midsize, every company that is out there selling or trading natural gas is going to need the software and the scalability to run more volume, more gas, more transactions through their systems. And so that's kind of what we're seeing now is people are starting to upgrade their technology. And also in the future, the market is always moving faster than where the gas technology is today. And just to give you an example, now we're going to have renewable natural gas, and obviously a lot of the systems out there can't handle that very specifically, or can't isolate that. And so that's one of the questions we get asked a lot: is how do I segregate my shale molecules from my renewable molecules? And so software is going to have to be built to do some of that. So that's where I see is the next challenge for the gas market would be on the technology side.
So on the technology for the volume, but I think one of the problems, and excuse my ignorance, that I understand from natural gas is there's a lot of leakage as well along the way, and that's part of the environmental impact. Is that a true statement that somewhere along the way you have some loss? Is that technology changing, or is that are we just gonna put more volume and have more loss? What do you see happening there?
Yeah. We are the companies. They're starting to certify their production, and they're also starting to monitor the methane leaks. So for the Biden administration, they've made it pretty punitive for a lot of companies to have methane leaks out there, and so people are installing sensors. They're making more leak-proof technology. There's software out there that can track leakage and flaring. And so a lot of companies are starting to use that software. And the US is really on the cutting edge when it comes to software development for these kind of things. So yeah, those technologies are already in the market and being used today.
And then does this mean with the increased demand? I've had friends that had Bitcoin mining operations that would just go chase the cheap gas. Right, you'd go somewhere where they're just going to burn the gas off anyway, and they'd power generators and do run a data center, for lack of a better term. Do those opportunities go away, or have they already gone away? Then that cheap power.
No, I think the supply of gas is there in the ground, right? We may not have built new storage in the U.S. and recently. We haven't been adding storage at as fast a clip as we did in 2 decades ago. But the gas in the ground is kind of like pseudo storage or virtual storage. And so as long as people know we have that commodity, we just see the crypto market as just another user of natural gas. So you have the traditional power generators. That's a traditional user. The LNG market is a traditional user. In the future, there could be an emerging crypto market that is becomes a big component of buying natural gas.
All right. So you've talked about the volumes going up. You mentioned software. You mentioned the complexity of having green molecules mixed in. Um, So where are we on this journey then? So your company's doing different things. You're fairly close to it, everything in natural gas that's taking place. W- how is the general health of the industry then?
Yeah, so pipelines are out there talking about how they can accommodate some of these renewable sources of gas into their existing infrastructure without having to invest massive dollars. Pipelines obviously have a limited budget, and so there are some creative solutions out there that are kind of being put. Introduced to the market now. So, for example, Tennessee Pipeline, they're started. They applied to the FERC. They got approved for a renewable pool of natural gas that can be traded and transported on the pipeline. And so you can have one nomination on Tennessee Pipeline for your traditional shale molecules, and you can trade this renewable gas on Tennessee Pipeline and have nominations for that is on a separate contract. And so that's kind of a way to separate packages of gas that are traveling on the same pipeline. Once they're inside the pipeline, the molecules get commingled. But before you put them on into one end of the pipeline, and when you take them out on the other side of the pipeline, from a tracking perspective, you can track these two packages, that this one went to this counterparty and the gas on that contract went to that counterparty. So that kind of gives us a roadmap for implementing and incorporating these renewable molecules into our existing framework.
Are they getting a premium for the renewable molecules? So if I'm ordering, you know, if I want my company to be green on paper and I want to show that I did it, and even though they're blended in the pipeline, the two questions are: does it cost more, and is there accountability that they didn't oversell the green molecules? Like, how do I know that the supply equaled what was bought?
Yeah. There's definitely a premium for that product in the market. Certain people demand it, and you can see it even on your retail electricity provider. When you go out and you buy electricity, they might tell you that, hey, 10% of your power comes from renewable, from wind and solar, and that is 10 cents a kilowatt hour versus the traditional source is 8 cents a kilowatt hour. And so people are already accustomed to being able to pay a premium for to send a certain price signal in the market to show that, hey, I'm actually a responsible user and I'm consuming gas from this source versus that source, and I'm willing to pay a premium for it.
And then how do you make sure that you have how do you track that? So you said there's software that's doing that. So how do I verify or the provenance of my natural gas, I suppose?
Yeah, and that's something we get asked a lot, in terms of our software solutions. We obviously have software that can track how much gas flowed from here to there every cycle, every day. And so we also have software that can do the same for some of these packages of natural gas. You can't track it yet on a molecular basis, but you can track it in terms of MMBTUs, and you can track these packages of gas. And it's probably something that we can delve into more. It's going to take more than one podcast to get into some of these details, which hopefully we can cover in another one in the
Yeah,
future.
absolutely. We could just kind of curious of the challenge of doing that, right? So because if you're blending it, it would seem that's if it's not well prepared, it would seem that could be oversubscribed, right? And that would not meet people's desire. All right. So what I've heard so far is that the gas is here to stay. From what you're saying, that we're going to need it for some period. You see it transitional. Um, you understand that there's an environmental impact, but you really it's a required step along the way. It sounded like you said because it spins up easily and up and down that it's good to help the predictability of a grid. And you believe personally it's one of the best choices out there because nuclear doesn't spin up and down very quickly, right? Is my understanding, and a lot of people
Well,
don't want it in their backyard.
Well, actually, nuclear has a very high capacity factor, and if there's any threat to natural gas in the future, it would probably be nuclear.
Mhm.
So, but that the issue with nuclear is the waste, and and the problems that could happen with a Fukushima type natural disaster that could happen. And it's really the NIMBY, not in my backyard type mentality that kind of is holding back nuclear, and then the high cost. It takes billions of dollars. The permitting process for a new nuclear plant could take 10, 15 years. But as far as being able to supplement baseload, nuclear really is probably the better option than even natural gas.
All right. So you talked about the permitting process being hard. When was the last natural gas pipeline built in North America?
Yeah, it's that a full blown interstate natural gas pipeline hasn't been built for quite some time in the U.S. I mean, the Keystone was the last one that got canceled. And so after that, there really hasn't been. There have been small, Mountain Valley pipelines, smaller pipelines that can transport gas, but even those have kind of been held back. And so you mentioned the permitting process. So that's another big challenge. Just to build any kind of permitting for a new pipeline or any new try building anything new in the US. The permitting process for anything takes so long. If you look at the IEA website, to permit something new could take anywhere, according to their estimate, is 12 years. And that's not accounting for the litigation that comes along with it. So building anything new, I think, is going to be very difficult in the US. We're going to unfortunately have to do with our existing infrastructure. And so the way to go around it is to retrofit the existing pipeline infrastructure to be able to accommodate hydrogen or
Well, that's what I was going to
uh,
say. But aren't you going to compete with ammonia and hydrogen in different molecules, right? So what I would put in my crystal ball, and I just totally winging it here, is that at some point there's going to be competition for those pipelines to have them meet other gas. So what you're telling me in this interview is that you believe that there's going to be demand continuing to grow for natural gas, which okay, we have an inability or desire to build new infrastructure to grow. And at the same time, we both agree that there's going to be another molecule fighting for those same resources down the road. So that seems like a problem.
Yeah, yeah. So that definitely is a problem for some people in the market if hydrogen displaces natural gas. Certainly not for the pipelines. It's more for the natural gas producers that might become extinct in the future whenever that happens. But there's a few things that are kind of, that scenario is going to take a long time to play out. One is, in 2008, when I was graduating from my MBA program, I thought the age of hydrogen is here, and so it took a long time, and we're still in the very early phases of hydrogen. Secondly, to replace hydrogen with natural gas, hydrogen is a much lighter, escapable commodity. And to be able to airproof your pipelines to be able to carry hydrogen, and it's also a much less dense commodity. So in terms of being carbon dense, natural gas is much superior to hydrogen. Now you could compress hydrogen more and make it more dense, but that means retrofitting your existing pipeline infrastructure. So let's say we overcome that as well. We're certainly not anywhere close to it. Pipelines haven't even started looking into this. They're still in the early phases of studying whether hydrogen can be introduced, and some pipelines have tried it. But then the other big question is, how are you going to produce all this hydrogen? Is it going to come from natural gas? What they're calling blue hydrogen, burning natural gas, or is it going to be green hydrogen, electrolysis? Well, if it's going to be electrolysis, and it's just the infrastructure for that isn't there yet. You can drill gas out of the ground, but for hydrogen, you're going to have to make something scalable to support the size of a $19 trillion U.S. economy to be able to feed them the entire economy off of hydrogen. Where are you going to source all these hydrogen molecules from? So there's still a lot of scientific challenges that we have yet to overcome. And in the absence of that, I don't think hydrogen anytime soon is going to threaten natural gas. I see it maybe 10-15% of hydrogen blending that happens with natural gas, but even that is at least 10 years away.
Yeah, I mean, I think with the hydrogen, and we had a guest on recently from GE, and they talked about pretty successful tests where they were blending hydrogen and natural gas for the turbines. And I think they'd gotten like a 40%. It was pretty sustainable. It was pretty significant from the trial I ran earlier this year, which was pretty
Yeah,
interesting.
yeah, sure. So the turbines, GE has built those, and that's on the side where they combust gas, right? On the consumption side, but on the production side for hydrogen, we're still to see mass scale production. How we're going to go about it, and just for you and me as technologists, whether it's gas flowing through a commodity or hydrogen flowing through a commodity, to the software it really doesn't matter. Our software is really can be adapted and is ripe for disruption regardless of what commodity is flowing through the pipeline.
So you mentioned the problem statement when you started your company, and you've been in business 7-8 years, if I recall. It's been a little bit of time. How manual is gas trading today?
Yeah, gas trading has become electronic. It's not as manual as it used to be. From those days of the trading pits at the NYMEX, there used to be open outcry and a lot of people in there, and they all become electronic, and that's how ICE, Intercontinental Exchange, has become so big. Is who would have thought ICE, which was started out of Enron, they bought the leftover assets of Enron, and then ICE actually bought the New York Stock Exchange. So a commodity exchange bought the biggest equity exchange in the world, and now ICE has become so big. It's basically a software company. And so a lot of technology and innovation has happened on the trading side. I remember as a gas trader, I used to have this big physical turret box on my desk, and it had knobs, and it was this clunky thing. And now there's virtual turrets. The people, you don't even need those anymore. But unfortunately, on the scheduling side, there just has not been as much innovation. And scheduling is just one step downstream of trading. And also on the settlement side, there have been companies that have tried to automate, streamline the settlements process, and there just haven't been enough dollars invested or any good results on that side. And so it's really, as we're going to flow more volume through this, through this engine that companies have, which is their trading engine, the scheduling and the settlements are going to be bottlenecks in the future. And so
Well, I
you
hope
really
the
need.
settlements aren't, because that's the startup that we've done, and so I'm hoping from Fidecta's point of view that we solve that. But normally I don't talk about my day job here, but I can't let you say that there's no effort going on there.
Oh
Uh,
yeah, yeah, absolutely. And that's what I'm talking about, is those are the kind of investments we need in these parts of our daily processes to automate it. People who choose to do them manually, it's kind of like either you're on the right side of technology or you're not. And if you choose to not be on the right side of technology, the corporate landscape is littered with companies that no longer exist because they didn't adopt the right technology.
So why has it taken so long for technology to get throughout the entire process, right? So you said trading, okay, that's handled. ICE and whatever other reasons, it's gotten there pretty quickly. So they had software experience there. Scheduling and in each of those steps. Why is it that we're in a pretty progressive automated world? The U.S. has got a lot of technology, a lot of dollars. I mean, we're in Houston. There's money going into tech all the time in Houston. Why hasn't this happened yet?
Sure. So one of the reasons is, scheduling is typically viewed as a cost center, and trading is a revenue generator. And so a lot of the decision making happens on the trading front, and scheduling is kind of relegated as this task. Really, if you think about going and filling up your gas at the gas station, it's not a experience that I want to have or I want to do, but it's a necessity. I have to do it. And so scheduling is kind of like that. And most companies, if they didn't have to deal with scheduling, they'd be much better off, and their lives would be a lot easier. But unfortunately, it is a very necessary component. Anybody who's in the natural gas market, even if you're a bank, you have to do scheduling, and that has to be done manually. And so it being a traditional cost center has been a big deterrent to people investing in this area. But there's no reason why you couldn't turn settlements or scheduling from a cost center to a revenue generating unit by automating it and then freeing up the time for all these people to focus on more revenue generating opportunities in the market. And so people who are using the software, there are a lot of tech savvy companies out there, and I've been actually surprised. There are some utilities and even pipelines that are on the cutting edge of this technology side. They've kind of seen the benefits. There are people who use our software, they used to hand type a couple of hundred noms a day, and now they're submitting thousands of noms automatically without hand typing. And so they're seeing the benefits of this technology coming to the market, and they're really seeing it as a differentiator, and so much to the extent that they don't want me saying in the market that, hey, we use this software, just because they see it as a competitive advantage.
Well, I think we've already talked about this, but I think we'll do some special episodes, you and I, to get into the technology, and we'll focus on that going into the future. I think this primer kind of gets people there. But as we come up to time, the one thing that I'm curious about, and you briefly mentioned, the LNG component, the terminals getting completed, so the market's changing, right? The timing was actually pretty fortuitous for the U.S. to get some terminals done before the Germany kind of crisis took place. How is that changing? So in the past, you kind of had a North American market, gas traders, and you had a European market for gas traders. what do you see from your experience with the LNG? Is that changing? And are we going to see some more continuity between trading, let's say between North American traders and European traders because the commodity is moving this way now?
Yeah, yeah, sure. The good thing going on for the natural gas market is like the natural gas is really, it doesn't have so many different grades as you do in the oil market. Oil can have many prices and many different grades. The entire barrel of oil is kind of the soup of chemicals. But natural gas, from that perspective, is actually just a one grade commodity, and actually pipelines require that your grade, the grade of the natural gas, have a certain content of moisture, etc., and carbon content, and that's the only way they'll put it into their network. And so that's the same thing is happening for these international markets. And so I see a natural gas market that quickly becomes, in the next 2, 5, 10 years, an even more tradable commodity than the oil market. Gas is obviously cleaner than oil. We know it's cleaner than coal. It has a lower carbon content and a high calorific content. There could be a time where gas actually overtakes oil in terms of being a globally traded commodity.
Well, I would suspect so that as the hydrocarbons change, that people would probably choose, if you could, where you could use gas, you would over oil. I suspect that even people would start using that decision today. Is my guess. So,
Yeah, yeah. And the thing that stops natural gas is, coal is something that, it's a physical product. And you could go to Home Depot, buy coal, load up your truck and take it somewhere, so it's easily transportable. But for the natural gas market, it has to have companies build pipelines that are interstate, or, freight containers. It's not so easily transportable. But once we get past that, the market's going to figure out all these LNG ships that are floating outside Spain. Eventually the market's going to figure out, and all that excess is going to work its way out, and it's not going to happen again. Everybody that sent a ship over there, and they're kind of just waiting for it to be offloaded, are going to realize before they do that the next time, that they're going to have a contract in place in order to be able to offload. So all these bottlenecks and inefficiencies over the next couple of winters, are going to work themselves out. But the demand for natural gas is there. Europe is not going to go back to Russia anytime soon, and there's really no other replacement for it. They're actually going back to coal instead, and they've turned back their permits on for the nuclear power. So the demand is certainly there.
well, I think we've covered a lot of ground. I think what I heard you say is natural gas is here to stay. It's not going away anytime soon. It eventually will, but it's a long time between now and eventually. And that there's some improvements in the market that are needed, and I think we're going to talk more about those as we go into some future episodes. Jay, I want to thank you so much for coming on and sharing with the audience your thoughts today. Thanks for being our guest.
Yeah, sure, no problem at all. Thanks for having me here, and look forward to reconnecting at some point in the future.
To our audience, we hope you've enjoyed this content. It was fun having this conversation. I enjoyed finding out more. And if you like our show, please don't forget to subscribe, follow, share with our friends, and comment in the comments. Find us on YouTube, find us on Facebook, add comments, and we'll respond. We'll talk to you again next week. Bye bye.